1, 2, 1, 2. Thank you, guys. So we're going to jump right into our next series of talks here. And it's the legal blueprint for global tech startups. And we're going to dive into the complex world of regulatory frameworks for tech startups. Our panel of legal and business experts are going to outline strategies to navigate these challenges. So please join me in giving a warm welcome to Joe, Natalie, Louis, Stephanie, and Jackson. Come on up.
Good afternoon, everyone. Great to see everybody. Thanks for joining us today. I'm Joe Gualiardo, a partner in the venture technology practice at Dentons, where I lead the technology transactions and global blockchain and digital assets practice. We're thrilled to be here. This is our second year sponsoring this particular event. If you don't know, Dentons is a global law firm. We have offices in over 80 countries, and we have a significant presence in Latin America. We routinely represent investors and technology companies in a wide range of areas. And in many ways, and most of the time, the innovation that we're helping them navigate really the boundaries of regulatory issues and really the boundaries of what regulatory oversight is handling. And so, particularly in technology and innovation, we are regularly dealing with difficult areas and overlap between technology and regulation. And with that, I'd love to turn it over to our panelists. Take it over.
Hi, good afternoon, everybody. Great to see you all here today. Thank you for joining us for this panel. My name is Natalie Haper. I'm a counsel at Dentons, where I work with Joe Guagliardo and my partner, Jackson Hu. Our panel today, we are joined by, as we promised, leading minds in both the investor and entrepreneurial side of the startup market, both globally and with a LatAm focus. To my left, I have Stephanie Perez. Stephanie is a managing director of business development and partnerships at Fin Capital. Luis Loaiza, who is the CEO of Hello AI, and with a long background of entrepreneurship in LatAm startups. And Jackson, as I mentioned, the partner in our Miami practice, where his work focuses on corporate venture financing, M&A, securities. Anything you bring him, Jackson can do. So as we discussed, we are going to keep this panel informal and try and take advantage of the variety of vantage points and perspectives that we have. So to begin, I would love for each of the panelists to give us a quick nutshell, a couple sentences on your background and your focus, and as you bring to the panel today.
Hi, everyone. So Fin Capital, we're a B2B fintech fund. We have over 122 portfolio companies, and we're full lifecycle investors. So we actually invest from pre-seed all the way up to growth equity and secondaries as well on an opportunistic basis. About 80% of our portfolio is here in the US, and the remainder is in Northern Europe, LatAm, and Canada.
Great. Thanks for having me. My name is Luis. I'm the CEO of Hello AI. We're mainly a platform where you can build AI agents that can interact within WhatsApp. However, the special thing of Hello is that we're building a marketplace of financial services that you can access through WhatsApp natively without leaving the chat. So that requires a lot of compliance, right, and navigating the regulations of each country in LatAm. We are operating mainly in Mexico, Colombia, Peru, Ecuador, and in the future, Brazil. So that's what we do. Thank you.
Good afternoon, everybody. Jackson Hu, partner at Dentons, based here in Miami, Florida. I'm originally from Brazil, so I do a fair amount of work with Latin America, both entrepreneurs as well as VC funds. And we do anything from financing rounds to M&A transactions. Pleasure to be here. I do advise a lot of companies on regulatory issues as they're getting started. They're looking to expand their business into the US.
Great. So bringing it back towards us, starting with Jackson, as you touched on at the end, and Luis mentioned a bit his introductory remarks, obviously a broad landscape here, but where do you see core regulatory issues that startups encounter as they start to expand globally?
Well, so a couple of things that come up. For example, if you are a fintech company somewhere in Latin America, maybe your country hasn't regulated that type of business yet. They may not have a need for a banking license for the type of service you want to provide. But when you're looking to expand to the US, you're going to need to have a conversation about what regulations would apply. The other part is if you're working in more regulated industries like in healthcare, usually that business is regulated in your home country and is very likely regulated here as well. But there are nuances and you need to know how to adapt your product and make sure that you stay compliant.
And so taking that, understanding that for a lot of startups that can be sort of an, how do you eat the elephant phenomenon, right? There's plenty of regulatory risk out there. Stephanie, on the investor side, how do you assess and kind of quantify or mitigate risk when you're assessing a startup?
Yeah, for sure. So because we're either investing in financial technology companies or investing in companies that are selling to incumbent financial services firms, it's part of our due diligence process. And more so than I think in other industries, with the exception of pharma or healthcare, for example. But I would say there are a couple areas that we like to dig in very early during our underwriting and due diligence process. The first is the licensing requirements in the market in which you're operating, as well as selling into. And so the banking license, which you mentioned before, is something that we would like our portfolio companies who do a lot of cost-benefit analysis on. It's extremely difficult to be able to acquire one here in the US. It's expensive, there are capital requirements, there's a lot of risk management and compliance that you have to be able to support on an ongoing basis. And so many fintech companies here in the US don't actually have banking licenses. They use sponsor banks who help run their programs for them. And so as you can imagine, it impacts their margins, and it also makes the cost of capital that much more expensive. And so from an operating model perspective, we want our founders to have a deep understanding of how long it's going to take and how expensive it's going to be to acquire a license. Secondly, third-party risk management. I think increasingly software platforms are using vendors and different partners to power different features or data sets within their platforms. So we want to make sure that you are properly onboarding them and managing risk accordingly throughout your partnership and vendor relationship. Data management is really important, as you can imagine. Prior to this, I was at JP Morgan working on partnerships with fintech companies. And as you can imagine, customer data is more important than anything else. And so oftentimes we would negotiate most of the time, to have audit rights for some of our partners if we ever felt that our customer data was compromised in any manner. AML, KYC, KYB onboarding, you want to make sure that you have real customers. First-party fraud is a massive concern, and it will impact your bottom line. And then, of course, as you're expanding into net new markets, tax considerations, employment law. If you're looking to open up a subsidiary, we want to see an analysis of whether it should be something you offboard to a third party or you use an employer of record rather than kind of standing up a business. And then also how you sell to customers. I think people don't really realize that in some markets, there are regulations around how you sell to the end customer. So you actually have to go through value-added resellers. That impacts your margin. You have to build those relationships. It takes a while to educate them on how to sell your product. So all considerations that are part of our due diligence process.
Fantastic. So Luis, let's bring you into this conversation from the founder side. What is the flip side of that coin for you? How do you determine how to prioritize and rack and stack those variables when you're trying to scale a business in multiple jurisdictions, as you've done?
Look, I think it's a little bit complex because when you're trying to build something new, an innovation, of course, what you're doing is building something that it's like a workaround or it's a new way to do something that isn't regulated. There's no rules, right? And you can see that in the blockchain industry, Bitcoin, whatever. So it's hard to prove, for example, to an investor, the use case when you are not able to build it and to show it. So for us, it was very complex, but at the same time, I think you have to build on a strategy. Our strategy was to partner with vendors that were doing a process in a different way, in the traditional way, and then translate those processes and technology to this new way that we wanted to bring to the market. So that's the first approach, right? The new strategy was partnerships. So we put in the market a different way to do it. For example, right now we are doing credit underwriting through WhatsApp and enabling retailers to do the whole process of credit origination until the end of granting the credit to the client through WhatsApp without leaving the WhatsApp app. And why WhatsApp? Because it's amazing. It's a widely used application in LatAm. 92% of internet users in LatAm are using WhatsApp to talk with businesses, and we decided to create a different way to automate processes through this channel. Most of the platforms are automating complaints, basically. So it's customer service. But what if we capitalize the chats that are happening in this messaging app? So we decided to put that layer, to put different layers of security, facial recognition via video, voice recognition, etc., and partner with trust service providers in different countries, so we can be able to sign legal binding documents without going to a website or downloading multiple mobile applications. So I think a strategy is important, understanding the status quo process and how it should be, and filling the gaps, right?
Yeah. So Jackson, you are in the interesting position of having had clients like Luis and clients like Stephanie and being on both sides. What do you see as the biggest potential delta in something that perhaps the investor side values more immediately or more heavily than founders typically, weigh at the initial stage?
Okay, so I'd say VC funds, when they're trying to make an investment decision, they will look for a regulatory and legal roadmap. They want to know that the founders are aware whether they have that license or they need that license. They need to know that information, right? If they come in and just talk about this is the beautiful business plan and how I'm going to generate this much in revenue, but they haven't focused at all on the fact that they need to be licensed or they need to have a banking partner and share revenue, there's a big problem there. So VC funds are usually very focused on that space. And that's where a lot of times having good counsel that can advise on that as well on the investor side is important, because we were able to validate what should be required for the type of business that startup is looking to launch. And overall, the hard part is truly it's a facts and circumstances analysis. You probably hear that a lot when you talk to lawyers, but the reality is there's not one answer, right? It depends on the features of your product and depends on who is your customer base and who are the potential users. That would dictate the regulatory advice you're going to get.
So on my side, currently working with Denton's venture tech practice, but have worked both in-house and in private practice. And one of my favorite cliches in thinking about the role of legal as a catalyst to business was always the car and brakes, the brakes one, right? Why do cars have brakes? It's not so they can slow down. Cars have brakes so they can go faster. If you have the proper controls around, then hopefully it helps your business accelerate. Both Stephanie and Luis, each in turn, how have you thought about that as you've built your own structure? Luis, as Jackson's talking about roadmaps and what has your role of regulatory kind of compliance and counsel been, and how have you thought about legal strategies to accelerate your business rather than hinder it?
Right. As I was saying, I think is understanding the current process, partnering with the right legal advisors in each country, of course, showing them, okay, this is the current process, and the legal framework, and this is the new one, right? There's no difference, just different types of connections, but a different user experience that help accelerate the access of, for example, financial services in WhatsApp. Why? we're doing this is because right now these retailers are deploying millions of dollars through this channel, and you can build these mini applications in minutes, right? So that's the main value proposition. So when we're building the roadmap, we need to build a strategy towards what we want to see in 3-5 years and the markets that we want to target. Of course, for example, Mexico has a different type of jurisdiction than Colombia and than Brazil. So what we try to do is understand the different landscapes and trying to fill the gaps with different other tools, jurisdiction compliant tools, basically. So integrate those tools and enable them immediately, right? This, of course, can take months, maybe 1 year, but well, we started with a simple product, and then we went to a more complex one with an easier user experience. So this is an evolving thing, right? When you first start sending rockets to the space, probably you expect a couple of them to explode, and it's hard. That doesn't mean that the technology won't be there, right? But it's a process. I think innovation, it's a process, and it's part of the entrepreneurial journey to be patient and to, of course, have the right vision to explain and to articulate what comes, in the next years, right? So yeah, I think that's the main strategy that we apply.
Yeah. It's really, so we covered lots of different subsectors of fintech, and it's really fascinating to see where you have like headwinds and then tailwinds as well. So you mentioned cryptocurrency. So we're an investor in Circle, which is the issuer of USDC, which is one of the largest stable coins in circulation. And it's been really fascinating to see how active their CEO is with policymakers, educating them on the space, being very transparent about their actual internal policy principles and procedures, and then like hiring the right team to be able to address regulation when it happens, because there is no regulation today, right? And so that's the reason why you have a lot of people piloting but not bringing things into production. And so that's an area where like lack of regulation is actually hindering. Hopefully there'll be some transparency and some regulation in place soon, but until then I think that there's a little bit of trepidation. In other spaces, and I think it references a bit of a use case that you mentioned, we see it a lot in Europe, but I think it's the same case in LatAm as well. Fragmentation and regulation has led to the rise in these like orchestration layers, and we see that in KYC and KYB onboarding. You're looking to onboard customers across lots of different regions. There are different data sources you have to pull from, different ways in which you credentialize those potential customers, and then you see it on the payment side as well. Because you have got global customers and global employees, so you need to be able to support pay-ins and payouts. Lots of different currencies, lots of different jurisdictions. And so we have a couple different portfolio companies that are kind of building the orchestration layer on top of that so that you can do that with one contract, one API, versus having to go out to 35 different vendors to be able to support a particular use case and scale that across regions. So not all regulation is the same. There are obviously dozens of different regulatory bodies, but I definitely think regulators, at least here in the US, are trying to be a little bit more educated. They certainly haven't been as proactive as they've been in other regions, but I think hopefully we're slowly getting there.
And picking up that theme, I guess, let's go back to Jackson. Looking at your array of sectors that you work in and various clients, what do you see as some of the increasing or exciting, promising new areas for tech innovation? And we won't fault you if you say AI, but bonus points if you can add to it.
Yeah, I mean, definitely, I think we continue to see a lot of activity in the blockchain space. Probably more ability to bring institutional investors into the market since the Bitcoin ETFs have been approved. There's a lot of discussion about the Ethereum, ETF being approved as well. Remains to be seen. So in addition to that, AI is a very hot area, all different spaces in AI, not just LLMs. There's a lot of different applications that are being built, infrastructure, and when we see kind of companies like Luis's company that is building a product that is really targeting enterprise use, I think it's very exciting, you know, because we see that there's a maturity to that sector. In addition to that, I mean, overall, fair amount of continuing fintech solutions, just because there's a lot of issues with access to banking, banking services, still in most parts of the world, as well as in the U.S. And then the ability to get credit when you don't have a credit score, you know, all those type of issues come up, and there's very smart people looking to develop solutions for that.
And Luis, what's your view there? Having been involved in the entrepreneur side on various startup initiatives, do you think there's certain trends that have transcended the trend and become kind of common momentum points for the tech sector as it grows globally?
Yeah, of course. It's an exciting moment with AI and fintech. I think the merge of these two, giants, it's something that we are pursuing right now. Generative AI is not only connecting open AI API, right? And put in production a chatbot within WhatsApp so you can push the data of your company and just see what happens. I think there's an important layer of governance around data. That means not only being compliant with GDPR and the clones of GDPR everywhere in different regions, but also in compliance with the internal policies of each of these customers. So I think it is an exciting moment because there's a lot to be done with generative AI. It's becoming a commodity. And I think that right now, startups like ours are in a mission to build additional infrastructure to create a secure layer to transact using generative AI as a way of interfacing with humans with human language. So I think that the opportunity is there. There's a lot of applications, right? But you have to take in consideration data governance, the different jurisdictions, what your client also is expecting, hallucinations, right? And you have to guide the AI. Use the AI for the purpose that you want. Is a tool, but it's not the only tool, right? You have to put different other blocks in the middle in order to build an application that can transact with different systems, with a banking system, with ERP, like SAP, for example. So I think that's one of the main things that I consider we should, really understand so we can approach that opportunity. There's a lot of things to do, so it's very exciting.
And Stephanie, do you want to add a layer of nuance over the top of AI for emerging,
since it's
exciting sectors?
The hot topic today. Yeah, no. Honestly, it's quite. You actually touched on a lot of the points that I would have touched on as well, which is predictive AI has been around for quite some time. We actually did an analysis of our portfolio companies, and initially we only had 4 AI companies, and then we looked at their websites and recent board reports, and we're like, oh, there's like 15 of them because everyone uses AI, some AI feature. And so as we think about refining our investment strategy in that space, there is a lot of saturation, there is a lot of competition. The question is like, what are investable assets in that tech stack? And where do you have differentiation? And the truth is, building these LLM models is very costly. Fine-tuning them is very much a services business. So what sits on top of it that are investable assets? And we think that tooling, governance, scalability are areas that are necessary to address in order to have actual enterprise deployments, specifically in the financial services space.
So you hit on a buzzword there that picked up one of my next questions. You would think we had planned this beforehand, and we did, but loosely. Well, that was differentiation. So how, in this growing, rapidly accelerating, tech ecospace we have, whether from your perspective as an investor or a participant, how can companies differentiate themselves, and what role do you think kind of prescient legal planning plays in that?
having a good idea is like half the battle. Like execution is everything. Execution, timing, and luck. And so obviously having the right operating model in place from the very beginning is extremely important, especially as you're kind of building out your team. So that's, I think, certainly something that's quite important. And then when it comes to differentiation, we tend to only invest in one company in a specific sector because we want to be super value add and hands-on and be able to support you without any bias. But the truth is that the lines blur, right? And increasingly, as you have more kind of platform plays horizontally, a lot of features overlap. And so I think the biggest differentiator and the biggest moat, aside from IP, is actually data. If you own the data, you can scale much quicker, and you have a much more practical, tangible use case.
What's
We can continue down the line if you like.
Yeah. I mean, I think right now the main difference that we're doing here is how we can enable citizens to access rapidly to financial services without all the hustling of downloading a new mobile application, a new wallet. You know, every bank in LatAm wants to build a wallet right now, and they are not realizing that, at least in the region, people don't want to remember a new user and password.
Yeah.
You know, they want to get easy access. At the same time, you have a lot of security that you need to put on top of that, so you can balance, right, the ease of use with security. So when we started, like 5 years ago, we started building chatbots. A year ago, we realized generative AI and fintech are, you know, things that are booming, and everyone was doing the same thing. So we stopped. We decided to grow less. We decided to grow 50% instead of 100%. So we redesigned the whole software because we needed to differentiate ourselves with the rest. And we decided to go to a niche where no one was looking into, that is the financial sector. Everyone is doing a chatbot for financial sector in regards to, you know, CX automation, but no one is really capitalizing the financial products that these banks and financial institutions, insurance companies can deliver within these new spaces, you know, using AI, using fintech in a simple way.
Well, as we knew it would, our 30 minutes has come and gone quickly. So thank you very much to all of the panelists for their time. Thank you for your time and attention today. It's a pleasure to be here at eMERGE, and we'll look forward to connecting you all in the aftermath. Thanks so much.
Thank you.